Hello and welcome to The Trade. Before we get to the charts, let's take a look at what's going on at a macro level. The US Federal Reserve has left interest rates on hold, with 3 of the FOMC Policy Committee's 12 members voting to lift rates by 0.25 percentage point.
If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. We will deliver the 2% inflation target. That is the committee's definition of price stability.
In the Middle East, a drone has hit a US-owned gas storage tanker in Egypt's Mediterranean port of Demeter. In an expletive-laden response, President Trump repeated his threat to retaliate against Iran for firing on US troops, saying, "We will be hitting them hard." Well, Iran has confirmed overnight that it had fired on US bases in Jordan and its ships in the Strait of Hormuz. Meanwhile, after the release of the Fed's policy statement, traders priced in a 57% chance of a rate hike in September. That's according to CME's FedWatch tool. US bond yields leapt high, with the 30-year yield surging to its highest level since 2007. Yields on the 2-year note fell 6 basis points to 4.23. The 10-year was up to 4.66%. And the US dollar was down around 0.5%. The Aussie, it is currently trading at 69.6 US cents. Well, let's now turn to the charts and see what technical signals are telling us. Zoran Kresovic is joining us from Blueberry Markets. Zoran, welcome back. Good to have you back on the show. I was just talking about the movement in currencies there. And well, before we get to that, overall, what's your take out of what you're seeing on markets at the moment?
Yeah, I mean, we're seeing a quite interesting, obviously, headlines coming from the US, which was kind of my key event for the week, including obviously yesterday's Aussie CPI data and probably a Bank of Japan monetary policy interest rate decision, which is due to come through tomorrow. But we've seen quite a bit of volatility. VIX is obviously climbed up. It's around 20 at the moment, so it's given another 13.5% upside over the last 24 hours. We also saw quite a bit of broad volatility in the equities as well, which ended up being on the lower spectrum or side of things, and quite a bit of sell-off coming through. And then we're looking at the bond yields as well, which I generally like to consider as the barometer of all markets in general. And we can see the 10 and 30 year in the US are climbing up quite aggressively, indicating that that stance from Fed higher for longer is obviously maturing quite nicely and likely to be the case in the coming months, as we do anticipate probably the Fed will start hiking rates at some point later in the year. So it hasn't happened over the past 24 hours, but nevertheless, the commentary around it does demonstrate to me that there is a good chance we'll get that 25 basis point hike coming through maybe in September or late end of part of 2026.
So, Zoran, given those moves from central banks, obviously that influences what we're seeing in currency markets at the moment. So we heard from the Fed. Now, later in the week, we've got the Bank of Japan ahead of our own RBA making its policy decision. How's this playing out, particularly with that Aussie-yen cross?
Yeah, so Aussie's done exceptionally well over the past few months. In fact, actually, since around April 2025, when we had that, tariffs introduced by the US President Donald Trump and shaking the global markets in general, including currency markets, we've actually seen nothing but an tremendous upside run on Aussie versus yen. And not only that, we've also seen anything against yen, considering it was a great carry trade and offsetting those higher yielding currencies versus the lower ones. But the tune might be changing a little bit here, and we can kind of see that at top of the chart, where we're seeing a massive distribution at the market top, or it does demonstrate like it is at the moment, Andrew, especially over the past 2 or 3 days when we've seen quite a bit of sell-off in Aussie. That was kind of leading up to the yesterday's CPI data that came through and demonstrating that inflation is easing off in Australia, and as a result, RBA may be pulling back from raising those, interest rates. So if you have a look at the chart, we're still in a long-term uptrend at the moment. We've broken through, and we are well above 100-day exponential moving average. We've got that range zone of around 111 to 115. That's kind of a sweet spot at the moment. Uptrend line in dash blue line is still hugging the trend quite aggressively, and I would probably look at the support level of around 111. That would be my fair case or base for any further downside. But Aussie is actually trying to gain a bit of momentum today. It's actually trying to reclimb and gain some of those losses, regain some of those losses from past few days. But all eyes are turning to the Bank of Japan monetary policy tomorrow. We do understand, obviously, Bank of Japan is likely to keep the rates at 1%. We do understand there is a inflationary pressure in Japan. And there is a good chance they will be hiking the rates at some point, obviously, in the future as well. So we'll be watching that very closely. We'll be watching the commentary around that, and perhaps see whether there will be another intervention by fiscal intervention by the Bank of Japan.
Zoran, let's turn to oil. Have you ever seen such a volatile market? Of course, this is all off the back of news flow out of the Middle East. Overnight, we saw Brent jump some 8%. You're going to take a look at West Texas Intermediate. Just talk us through what you're seeing on the market at the moment.
Yeah, sure. So it's definitely not ones for faint-hearted, Andrew. I can assure you that, especially if you're a short-term volatility trader or even if you're a scalper and trying to take full advantage of scalping the market. I mean, the moves that we've seen are quite incredible, to be honest. And for a trader, for an investor, if you're looking at the shorter term horizon, I'd be actually ensuring that I do have a very sound risk and money management rules in place to protect myself against those massive swings that can actually kind of punch you out in the market, whether you're actually trading long or short. Overall, the downtrend line is still actually in play, and this comes to the one of those things where technical analysis can be quite supportive in your views, and especially if you actually got a good grasp of it. And if you have a look at the moves from around 1978, which was actually when the oil broke out back in March 2026, and the Middle East conflict, we can actually see the downtrend line is fully still in play. And whilst it has actually reached the other day $93.26, it's bounced off that level, it's come back down, gapped, and now it's actually attempting to reclaim some of those grounds. We can see a small slight gap there as well. I would expect probably that to be filled over the next couple of days. The retracement of the last major range from around 66.94, which was earlier in July, and that support around $67, is around 50%. So it's actually bang on 50%, which if it does reverse and continues heading higher, and it does break the 93.26, we could be going into another secondary cycle on crude oil. Now, that would obviously need to be backed up by some fundamental news and escalation of Middle East tensions. We have seen over the last couple of days, there is actually quite a bit of challenging components coming back and risk premium into the market. But then 93.26 is an absolute key resistance level. If we can break that, crude oil is likely to head higher. Obviously, Brent is likely to head higher. Demand is going to be there. There is probably not enough supply in the reserves, in the market overall, and that could actually climb a wall of worry when it comes to the inflation and global fiscal and monetary policy from central banks when it comes to the interest rate decisions.
Yeah, I'd lots to consider. So dynamic, that market. Zoran, let's finish with a look at Bitcoin. It has struggled in recent times. Any particular catalyst likely to emerge here? What are you seeing?
I mean, Bitcoin has been hitting some major key resistance levels at the moment, or in fact, actually probably support levels as a few days ago. The sweet spot that I'll be looking at here is anywhere between kind of 57 to 67,000 USD. I think that's an absolute must. We're actually seeing quite a bit of profit taking coming into the effect at the moment. We've actually seen kind of a 15% upside run on Bitcoin from around 57,587 towards that 67,452. Now, if you're long on your existing positions, then obviously it's a good profit margin of around 15%. However, my concern at the moment is that it's obviously hitting some major resistance levels and it's not able to actually kind of push through that. We need to see a climb above 67,452 two to actually provide another layer or open the floodgates for long traders to actually come back into the market and regain some ground. Alternatively, if you do see a sell-off here, anything below 57,587, Andrew, is considered as a bearish move. Institutional net inflows have been positive over the past couple of weeks. As a result of that, we are seeing some retail money coming back into the market and trying to actually take advantage of those key support levels. But 57 to 67,000 is still a neutral bias. Any further downside risk on Bitcoin is probably going to be prolonged and supported by the key headwinds of NASDAQ, AI stocks, and risk-on sentiment. So I'd be watching a close correlation between the global or US equities, in particular tech sector, and Bitcoin. We have seen Bitcoin tremendously bearish since around October 2025. So the overall long term is still quite bearish, but obviously at some point you will need to stop, and buyers and long-term viewers or short-term volatility viewers traders will actually likely to come back and start taking advantage of those swings and massive moves.
Zoran, thanks for getting us across those key charts. Thanks for doing some blueberry markets.
Thank you for having me.
And that is the trade.